What's going on YouTube? It's your boy Charles Enoch. Y'all already know we back with another Invest in Myself episode. Roll the intro. So before I get started, your boy gotta do the YouTube thing. So my goal is to reach 10,000 subscribers by the end of this year. I know it's a crazy goal, but it's my goal. So let's make this thing happen. So if you're new to the channel, go ahead, take a little bit of time, hit that subscribe button for me. Also, make sure hit that like button for me as well and leave a comment down below. I appreciate anybody that does all these things because it does help me reach a higher audience base. Thank you for the love in advance. It's much appreciated. I recently received a question from a subscriber and they asked me, would you use your HELOC to buy a property in full? Or would you use your HELOC to put a 20% down payment on a rental? And the answer is, it all depends on the situation. Now I've done both. In the most recent purchase, I used some of my HELOC to put 20% down to get a mortgage. But today, I want to show you guys how to use the velocity banking method if you buy a property in full using your HELOC, how you would want to pay that down. Now, this is going to mimic the concept of using your line of credit as your bank account. When you get your income in, you're going to put that thing into your line of credit and slowly take it out when you have expenses. You're trying to maximize as much income into that line of credit and keep it in there so less interest will be accrued daily. Now, as long as you have consistent positive cash flow, the money that you're putting in and the money that you're taking out, let's say you have $5,000 coming in regards to income and $4,000 coming out into expenses, that means the line of credit or the HELOC is getting paid down $1,000 every single month. Now, in our specific situation, we would be using the rental property income, putting it into the HELOC, and any expenses that occur on the property, we would be taking it out of the HELOC. And since you have the property paid in full, insurance and property tax are not included. It's not lumped into a mortgage. Now, I'll show you how I use velocity banking to take care of those separately. So I know this sounds complicated, but you already know I got the whiteboard in the back, so we're gonna get down to business. Let's go. All right, so we're on the whiteboard. So let's break this thing down here. This is going to be pretty reflective of the purchase that I just bought here. So these numbers are pretty similar. So let's see here. The primary home, this is where I'm pulling out my HELOC, right? So I bought my property, let's say, for $185,000 way back in like 2015. Now it's appraised for $450K. So that difference is $265K. Now, the bank allowed me to get 80% out of that difference. So 80% of that is going to be $212,000 for a HELOC that I have here, right? So the property that I bought, it is $138,000. The rehab is estimated at $7,000. So adding those up, $145,000 that I would pay off of my HELOC. Now, the estimated rent in that area is going to be $1,400. Now, the value of the property, since I had to get an appraisal, was $150,000. Let's say that I purchased a house in full, right? I can pull a HELOC off of that property, and let's say it's the 80%. I got $112,500 off the HELOC. So this is just a scenario. If I bought the property and used my HELOC fully, then I was able to buy it in full, and then I can use a HELOC, or I can take a HELOC off of that property. So we're going to go to the other side of the board and see what the velocity banking method is of paying this HELOC off since we bought the property in full. All right, so we're on the other side of the board. So let's see how we would pay off the HELOC here. So these numbers, $145,000, that is how much I spent on the property. That's how much I bought it for, and then the rehab all totaled at $145,000. Now my HELOC, and remember the HELOCs are variable in interest. My HELOC right now, I think it's like 3.9%, but I'm just gonna put 4% here. So we're gonna do 145,000 times 0.04, because that's the interest rate on my HELOC. Divide that by 12, because there's 12 months in a year. The interest charged in that month is $483.33. Now, what we're gonna pretty much do here, let's say I get my rental income of $1,400, we minus the interest of $483.33. That leaves us at $916.66 for rent total after the interest is deducted out. So if we're gonna take that math, let's see how long it would take to pay off that HELOC, right? So 145,000 divided by 916.66, that equals 158 months, which equals 13 years and 2 months to pay off the HELOC. Now, this is if the interest pretty much stayed the same, but the interest goes down every time you put money into it. So when we're parking that check in, right, the interest is going to be less and less. So we're going to use an example. Let's say that we got it down to 130,000. We're going to times it by 0.04 because that's the interest rate on the HELOC. Divide that by 12, it's $433.33. So you see the interest goes down. So again, it's going to take less than 13 years. I would probably take another 3 or 4 years off because the interest is slowly going down. This is just calculated as if the interest stayed at 483 the whole time. And remember, on this HELOC, I have $212 total and I only use 145, right? So when you're putting that $1,400 in, if something happens to the property, you are able to pull money out of that HELOC in certain times and things like that for maintenance. So remember that your HELOC is like your bank account, but we're only using the rental property money, the $1,400 that goes in, you keep putting that in there at all times. Anything in regards to maintenance or whatever the case is, you will take it out of that HELOC. Now, let's look at insurance. So this is how I personally do things here. So I would use a credit card to pay the insurance. You can pay the insurance monthly. You can pay the insurance 6 months or a year. My insurance, if I pay it for the year, there's a discount. So that's what I do. I use my credit card and I get points off of my credit card just for using that credit card. So let's break this down. Let's say that my income is $5,000 a month, and this is just me working my 9 to 5, right? Expenses are $4,500, which leaves me at a cash flow of $500. Now let's say I have a credit card of $4,000 and a line of credit of $3,000, and the insurance for the year is $761 for that property. Now, this is what we would do in regards to velocity banking, and I have a lot of velocity banking videos in regards to using your credit card as your bank account, right? So insurance is $761. We would put that onto the credit card. So our credit card is $4,000, but when we charge $761, we are going to be left with a total of $3,239 on that credit card, right? So we're going to use our income, the $5,000, no matter how it comes in, weekly, bi-weekly, monthly, we're going to use $761 of our income. We're going to put that onto the credit card, right? Because we still have $3,239 available. We're going to pretty much pay that in full, it's going to make the credit card go back up to $4,000. So the credit card is paid in full. Hey, we get some points while we're at it as well too, right? We're going to use our remainder income that we have. We are going to first pay our rent or pay our mortgage. Usually you got to pay that in cash. So you want to pay the rent first, and then you're going to pay the rest of your expenses, however much you can pay, right? So our expenses total is $4,500. So we only have $4,239, which will leave us with the remainder $261 of expenses. Now, how are we going to pay those expenses? We already know we're going to use that credit card that we just paid in full, right? And then we are going to pay the remainder of our expenses. This leaves our credit card at $3,739. You would repeat this process one more time and you will be able to pay that credit card off in full. So this is how I pay my insurance off every single year. Now we're going to get down to the property tax. Now the property tax, me personally, I still use my credit card because I like getting my points off of my credit cards. But I want to show you a way in regards to using your line of credit, let's say a personal line of credit, to pay off the property tax. And you can do this for the insurance. I just want to show you guys both methods with both of these velocity banking weapons here, right? So let's say the property tax for the year is $1,130 for that rental property. What we would do, we would use our line of credit. Remember, we have $3,000 on our line of credit. We would use the $1,130 from our line of credit, pay our property tax off. Now, the next step is our income is $5,000. We're going to use $1,130 to, guess what? Pay our line of credit, pay it off in full. Once we do that, the remainder of our income, again, no matter however it comes, monthly, bi-weekly, weekly, we are going to throw that first onto the rent, and then the remainder we're going to throw onto the expenses. Now we see we have $3,870 of income. Our expenses are $4,500, which leaves us at $630 remaining on expenses. Now, how are we going to pay the expenses? We already know we're going to use the bank's money. We're going to use that line of credit that we just paid in full and use $630 from that line of credit to pay the remainder of our expenses. Now, when we do this, our line of credit's at $2,370. With a cash flow of $500, we would pretty much have to do this 3 times, and then we would pretty much pay off our property tax. Now, this is what I would be doing if I use my HELOC to pay for my rental in full and how I would pay off my HELOC. So this would be a velocity banking method of paying off your rental property. If this video was helpful, definitely hit the like button for me. Let me know if it was helpful. Even let me know if it wasn't helpful. I know this is an unorthodox method and it can definitely confuse people. Also, if you're new to the channel, please remember, hit that subscribe button. I try to upload videos twice a week. And like always, you guys have a good weekend. Peace out.